Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, May 8th, 2020. I am Frank Ochoa, aka PivotBoss. Happy Friday, everyone. Good to see you all. Here's a look at the ES in the daily time frame. You'll see again we continue to push higher here off the March lows. Very, very strong move. We are coming into overhead resistance, which we've talked about before, right? The 2950 zone to 3000 zone is a very nice clear area of overhead resistance, which became support and broke, now overhead resistance. And so after we've had that recent reaction to the April 29th FOMC key level, we are now coming back up toward it for a retest from below. Haven't quite gotten there just yet. It's 2935s. But we did get the NFP report that came out here, and there were 20.5 million jobs lost in April. Unemployment spikes to 14.7%. And now what we're seeing is a high, the overnight highs, and then we're seeing a very clear compression in the pre-market here heading into the RTH session. And so having that spike happen here and having a compression at these highs, there could be some sort of distribution that happens the rest of the day where perhaps we close back at or below the previous week's close price. That's been the price of the week so far, 28.80 to half. That was the previous week's close here. We basically offered it here, offered it there, closed at it there, exploded off of it here, and now with this sell the news type of idea here, we could be looking at a return right back toward that level, 28.82 half. Right now trading 29.11s. Again, if there is a rejection here above this level to close the week, we could be looking at a failed breakout from this narrow 5-day range, which could be suggesting a little bit more weakness ahead. So something to keep an eye on here. But this week we started the idea with the pre-market report Monday morning saying that there was a rejection of the previous week's close and low, and that likely suggested a rally of 1 to 5 days up. We have seen that come to fruition, a very nice completed move here so far, and now for all intents and purposes we have a nice clear compression pattern that could take us up or down to finish the day. The bias has been to the upside. We'll continue to watch that intraday range. Alright, let's take a look here at the NQ. What you'll notice in the NQ is we are on new highs here. We pushed through that 91.38 previous month's high. We're now through it. This one also had a major rejection here to begin the week. Remember, we were rejecting the previous week's close and low, and I mentioned that that rejection here could lead to a steady move higher the rest of the week. For those of you that were able to take advantage of that, well done. At the moment here, we are now at highs of that zone, and again, there could be some profit taking that comes into play. There's been a spike up to 92.20 or so after the NFP report. If we can't get through that spike there, 92.20, perhaps the high is in, and we could be looking at a fade the rest of the day. The last time we saw something of this nature, we also had that fade. This was a Monday here with a failed low, rallies Thursday. The high was put in Friday morning, and it faded back to the previous day's midpoint. Will we see that again here? And again, 91.38 is going to be very, very important, but we may see a break even earlier than that. If there's a failure to hold 91.60, then we could be looking at a roll back down into the previous session's range. So 91.60 is going to be very important today. Holding that zone still suggests more upside given the overall trend. All right, let's take a look now at crude oil. You'll see here with crude oil, we had a pretty significant rejection in the previous session. Really significant rejection day in the previous session there. Today we are back to the midpoint and off the midpoint. So 26.09 is the midpoint from the previous session there, and we hit it today and are now trading 25.70. This could be an opportunity here where we see a drop ahead. Remember, we've had lower value relationships on the pivot range month over month. We rallied, closed outside of it, but rejected the last 2 days. We're now rejecting the top of the pivot range here today and the previous session's midpoint. we could be looking at a retest of lows to come here ahead. At the very least, we could be looking at a drop into 22, which would be the previous month's close price. All right, let's take a look lastly at gold futures. With gold futures, this one is down about 0.2% at the moment. We had a pretty explosive day higher in the previous session here, which we rallied the entire day up. We're now seeing a failed high above the previous session's high. We've seen a series of lower highs in general. We've seen a very clear descending pattern develop here from 1675 and across the highs here coming into about 1735s. So right now, that's the range here, 1675 here, and these recent highs, 1635s. Above that zone opens up a bit of a squeeze, and right now we've been kind of range bound, and it's hard to really see this one going right now, but at some point we may see expansion, and if this one can find some legs here off the 1715s this morning, then perhaps we may see a bounce that could come the rest of the day off the midpoint from yesterday's range. So again, right now mostly range bound. If it can get above 1750, it really opens up quite a bit of upside. 1740, 1750, and a failure to hold 1675 will open up 1575 down below. So right now, it's trading well in the range. All right, that is it for now. Again, happy Friday. Please be sure to like, share, and subscribe. As always, have a fantastic weekend, and I will see you in the trading room. Take care.